Good afternoon, everyone. It's been a number of days since the last tutorial, and that is just because I didn't have anything to discuss. So, if you have an idea, just DM me on Discord. Twitter, I just tend to not really look at, but if you hit me up on Discord or write a comment on YouTube or a comment on Twitter, I'll probably look at it. Let's get into a few things. This is going to be generally discussing execution, more or less. Uh, let's talk about one, how to tell when your thesis is wrong. Two, what does it mean for price to hold or accept a level or a range? And three, how many times or touches do you play a level when price reaches it before you no longer consider it relevant? Is there a condition with price or structure that may cause you to invalidate a level before it's reached or stop, or before your stop is hit? So I'll preface all this with this is going to be dependent on your personal time frame that you're looking at and your overall style that you're looking at. I have a friend, Mr. Stowe 42. I don't know what his Twitter name is. Stowe. It is Stowe. There we go. Theta Stowe 42. Stowe does a really great job of repeatedly scalping levels. He's really good at that. I'm really bad at that. So Stowe is an example of someone who's trading a smaller time frame. He's taking a lot more trades than me, and he's done really well with it. But let's get into the first question here. How to tell when your thesis is wrong. I'm trading structure, right? So this actually isn't too complicated for me. Let's take today, for example. What do we know coming into today? Well, we had this huge ramp on Friday, which was a break of this huge zone we were trading in for about a week or two. So we get this huge ramp up. We get a POC shift into the close here, that orange line, the kind of bronze line. And then Globex fails to break that 4 p.m. close, all of Globex, and we get this tiny Globex range, and it's a Monday, right? So overall, small range in Globex, no follow through to the upside. You get this POC shift, which indicates to me distribution at the close. So overall, I'm looking for a short. So to me, the way I look at it is I want to be short somewhere near these highs. The most aggressive short for me to take, therefore, is the bottom of this sort of zone here. We are chopping around into the close here for the final couple hours, and the bottom of that zone looked to me to be around 42-ish. Seemed to be a decent level overnight as well, so I got short. My stop on trades are 4 points. So my stop was in at 46 3/4, which happened to also be above the overnight high. The idea being that is the most aggressive short I could take. That is with a stop above the overnight high, so breaking the highs would, in my opinion, lean towards the upper auctions being accepted. I'll touch on that later in a bit. And therefore, there's a higher probability that the prior week's high goes as well, right? So to me, when I'm trying to find a position, a spot to get long or short, I'm trying to find the most aggressive location I can while still being near the negation point. So if we looked at a long after this huge ripper on Friday, just this kind of non-stop upward movement, where I would see this thing getting negated, I don't really want to see it lose these prior weekly highs around 23 to, I don't know, kind of like 17, 15-ish, this kind of area. I don't want to see it lose this sort of zone. So maybe the last spot I wanted to get long today is there, 19s. The most aggressive spot I could get long are 29s. Why 29s? It's kind of the high of this little back and forth chop we had for about an hour or so. So that is the most aggressive long. Here is the second most aggressive long. Below here, in my opinion, you've kind of lost it. You're back inside the prior weekly highs. You're near the open from the Friday session, and when you get a breakout day, this big sort of breakout day, why would you be coming all the way back to the open? It just doesn't make sense to me. Why would you be doing that, right? That to me is a failure to break out. I don't want to be long there. So that's how I'm looking at when my thesis is wrong. It's a very, again, I'm trading such high time frames that it's a very predetermined thing. I'm not looking at the MGI intra trade to determine when I'm wrong. So when I got short today at 42s, yeah, it kind of looked like shit. I mean, if you look at a 2-minute chart, goes down here, kind of holds 38ish, 39, comes back up, goes down again. You could call that a micro double bottom, comes back up. To me, I was so sure it was going to stop me out here. Doesn't, flushes down again, runs this little low, comes up again, flushes again. To me, if anything, this is when it would look good, and in reality, it came all the way back up and made a new high. So to me, for my approach, I'm not looking at intra-trade MGI. That'll prove me wrong. I'm instead looking at where the overall trade location is determining where I'm going to be invalidated. What does it mean for me to hold or accept a specific level or range? Well, in my back testing, we use 5 points for most of this stuff. And the reason is pretty simple. 5 minutes tends to be the average rotation size on ES. You could use 20 points on the NQ, I believe 40 points on the Dow, and the Russell's probably 3.5, something like that. That's as simple as it is. So to me, the initial balance was at 41s, right, today. I think that was our tiny initial balance here, 6.5 points. So we broke that by over 5 points, 5.5 points. So to me, I would consider that acceptance of the IB high. Some people might use time. Some people might use singles. There is statistical validity to using singles on days where we have one time framing as well as singles in a direction into the euro close. That's a pretty potent. That's pretty potent acceptance of the open, if you want to call it that. We usually will not get a flush of the open after getting some sort of one-time framing up or down, and with single prints. So, in general, these auction market theory concepts, acceptance, rejection, accumulation, markups, distribution, value areas, the initial balance size leading to the size of the range of the day. All these things I've found are valid. They're valid heuristics, right? You just have to combine them to figure out what specifically works on the ticker you're watching. And for me, on ES, it's kind of 5 points is what I'm looking at. Last question. How many times do I play a level overall? I play it once. And that is simply because I'm essentially trading a daily chart. And I'm just executing intraday. To me, if price comes down here to 29s or 19s, the first time it touches 29s, these guys over here who were shorting, they were short here, they were shorting again over here. These guys who were shorting got caught offside during the ramp up, okay? So anyone who's still short here is going to be bid to cover. So the first time you touch that level, what's going to happen is you're going to have these shorts. If we came down here, you're going to have those shorts immediately covering, which might give it a temporary bid. Then you're going to have anyone who's a momentum trader, they're going to see that short covering. They're also going to get long. And, you know, maybe by then you see some initiative buying. I'm not sure. But my point being is that the first time it touches that level, you're getting a combination of multiple time frame players initiating there. You're getting the short covering, you're getting the momentum guys. So if that hits my take profit, which is a fixed amount based on my statistics, so for me it's 6 points, if that gets to +6, if it goes from 29 quarter to 36 quarter, 35 quarter, sorry, if it gets there, based off of short covering and momentum chasing by other people, that's great. Why, to me, then the second time it comes down there, okay, the short covering is done, the momentum guys aren't in there, so now you're relying more on initiative buying, which is, it can happen, but why wouldn't you just hit it when you have all of that other all these other guys also buying with you. That's the way I look at it. But again, like I said, Mr. Stowe here, Mr. Theta Stowe 42, he does really, really well by hitting a level multiple times. He'll hit it. I've seen him buy in at a spot like 5 times, and he'll just keep peeling out partials until it's time to get into runners, and then he'll let the runner do what it does, and it works really well. But to me, because I'm such a non-MGI based trader intraday, because I'm just trying to trade location more than the order flow, to me it just makes sense to hit it the first time it gets there. I think that's all I got to say on this topic. Hope that makes sense. Hope that helps. See you guys later.